Guys, it has been about a year. I didn't look at the exact date, but let's say roughly a year since I did one of my favorite podcast interviews, whatever you want to call it, that I've done. And not many people have seen it, but I think for the people that have, I've had probably at least 5 or 6 people reach out and be like, hey, that was really, really helpful to my overall outlook or way I approach trading, investing, whatever. And I did a podcast with Ravi Monkey here last year, and we went through his whole background, kind of how he approaches, building a portfolio, how he thinks about things. And guys, you're gonna want to listen up because we are now here a year later. I would say lots of the things we talked about have more or less come to fruition, some more, some less maybe, and it's been quite a wild ride. So first of all, if you guys haven't seen it, I would suggest going back and watching the first one before this. I know you won't because you're losers. I know you won't do it. So I'll try to guide you through what we talked about last time, and we're going to kind of update a year later, kind of where we're at. So Ravi, how have you been? What's your life update?
Well, I've been on vacation a lot. It's the way, especially when you have a 7-month grind chop in the market. Take time off. Holding is hard, but if you're in front of a screen, it's much harder. So I stayed away. We made those bets last year and stuck to most of them. Added a couple of new things that we'll talk about. And I think just to do a quick recap, if you haven't seen the previous video, is I have a 3-bucket strategy: real estate, stock, bonds, and disruption. And we outlined that, hey, last year, when we were talking around this time, I had 40% real estate, 40% stocks, bonds, and 20% disruption. And that's changed dramatically now because I sold most of my real estate.
Whoa.
Yeah.
Whoa.
So now I'm 10% real estate, 75% stocks, and 15% disruption.
That's a big change. Wow.
Big change. And you're probably going to ask, why did you change?
Yeah.
So a little story here. Just give you some background. I own a lot of residential real estate and also investment real estate. So I had a lot of properties in a town called Moab, Utah. This is southern Utah. And the town, for some reason, increased their property taxes by 50%.
50?
Yeah, 50%, 40 to 50%. Then I was looking at homeowners insurance, the cost of property maintenance, and an investment that was yielding, 10, 11% return somehow started yielding 5%. Then I looked at interest rates and what I could get by just owning, 10-year treasuries. Which was around 5%. I said, wait, this doesn't make sense to me.
Yeah.
So I just started selling my real estate holdings because I was like, everything just shot up. There was a repricing in certain parts of the country, not all parts of the country.
Especially Moab probably got a little bit of a boost there with that kind of vibe there. That
exactly. Yeah.
City. Yeah.
Yeah. So I started selling properties around there and some other places. And hence why my real estate dropped so much. Because if you remember from 2008 to 2020, we were in a zero interest rate environment. And you had constant property appreciation, relatively low inflation. Then all of a sudden, we started seeing spikes, the last couple of years in terms of property taxes, homeowners insurance, maintenance.
Yeah.
And so for a property owner, depending on the area, I decided to sell because, say, it's been a great 12-year run. I looked at other assets and say, hey, there are a lot better options right now in the market than real estate. Hence, that's been the biggest shift that I made within the past year. So when I say 75% stocks, this came on to the theme that we talked about last year. The theme hasn't changed. We talked about crypto and AI.
Yeah.
And then I started looking at AI even more closely. And we were talking amongst our friends in Monkey Baby Business, and we're discussing data centers and the potential there, and we realized we're not bullish enough. And I took that capital from real estate, started buying more Nvidia, more Meta, more Microsoft, because we quickly realized that all that compute and data center is just going to continue accruing value because everyone needs them. So that was that bet where we left off last year. Then a friend of mine was continually pestering me to buy MicroStrategy. I did
Mm.
buy a little bit during the bear market, but I started really buying heavily during Q1 of this year, and I'm glad I did. I didn't understand the bet
Really. Mhm.
that much. And what we talked about earlier was you have Michael Saylor borrowing fiat at 0% and buying Bitcoin. Okay, it sounded like a Ponzi to me,
Mm.
and I say, why is he doing this? And it finally hit me that he's front running the appreciation of Bitcoin, and his stock price, the market is assessing it 3 to 6 months out because he's front running Bitcoin. And I was looking at the demand for his debt, and there were a number of investors waiting to buy that debt. He could have issued as much debt as he wanted, and they just wanted exposure to the sector. And we'll talk about this later about the regulatory
Yeah.
climate. They just wanted some sort of exposure, and MicroStrategy was serving as that proxy. So if
So
you look
really,
at it,
the
yeah,
goal is for that 3 to 6 month out pricing would theoretically back into what Bitcoin's price would be
exactly,
in the future, right? Yeah.
exactly,
So
yeah,
he's front running. So he's getting free money to use to buy it, and which adds buying pressure, of course, which is demand. And then people are basically willing to pay that premium because not only do they assess that Bitcoin's price is probably going to be higher, but also they have no other option to
yeah,
buy that Bitcoin.
exactly, right. We had the ETFs that came in play obviously earlier this year, but people are looking at MicroStrategy as a call option on, on Bitcoin, saying that wait a minute, now
Mm.
now we have options available, but that wasn't available as well. So if they want to go out on the risk curve, hey, MicroStrategy is it. That's the play. And and again, that was a big bet. And if anyone's looked at MicroStrategy, the past year it's moved. I think it's 6 times faster than Bitcoin
Mm.
year to date, something like
Yeah.
that. Yeah. So it's the returns. The returns have been amazing. So again, that was adjustments I made in my portfolio. I never thought I would sell all this real estate like I did, but the numbers just didn't make sense. Uh,
Well, this goes to one of your points that
yeah.
we talked about in the previous video. And guys, I just watched this yesterday and it was great refresher, but like never marrying an investment, right? And you really had a long marriage to the real estate, but you were open to the idea of just being like, hey, the numbers don't make sense. And like, I'm willing to let these go.
Yeah, yeah,
Yeah.
and I'm glad I did. Looking back at it, because I'm looking at those real estate investments, and uh, they're underwater now.
Right.
Large number of them. It move fast.
Yeah.
Yeah,
Because not many people are like kind of making those moves. And at the time, it could probably, just like a lot of people, like it probably felt like it was going to go on forever, right? Everybody was going to move to these second tier cities, nature. It was going to be the new way of living. And like you couldn't fathom the idea of like selling a property that you had there in one of
Y-
those spots. But
yeah,
just like
and
anything, like it's hard to sell when it's probably the best time to.
yeah, because my initial thought process was, hey, because of COVID, no one's going to return back to the offices.
Yeah.
Oh, well, there'll be a lot less of. But then I look at recently where 85 to 90% have returned back
Yeah.
to office in New York. And I was looking at the rest of the country, and that percentage has increased. Now it's not like what it was pre-COVID, but it's a lot higher than I thought. So I was a bit off there. I thought the secondary properties, living in the countryside, was going to be a larger boom, but it was not. But like you said, we adjusted. We look at the numbers. We're not married to the investment, and we made another bet.
Yeah. Even the firm that I work for, Trading Futures, they kind of allowed that for a few years, and now they want that feeling of culture back, and they won't hire new people remotely. You got to come at least put in a year or 2 years in Chicago, and really feel like what it's like to be there. So it's kind of to your point, and they're flexible to a point, but they want office life to continue to exist. And honestly, a lot of people do too, right? They thought they wanted complete freedom, but a lot of people like the office. Like I miss the trading desk to a certain extent as well. So on the investment theme thing, we talked about like you want to align your investments to your themes, like whether that's picks and shovels, software, hardware, whatever. And you say that you're now like kind of 70% stocks, 15% whatever crypto. Like when you say stocks, I'm starting to think it's all crypto. I know it's some of the like Mag 7 stuff too, but like there's almost like they're merging into this one epic rocket ship. So is it a lot of the plays you find yourself in picks and shovely? Is it software? Is it like what's standing out to you currently when it comes to having most of your eggs in those baskets?
So it goes back to the themes we talked about, right? We talked about demographics, and that's still the same. We have a large number of baby boomers retiring. We also talked about crypto, and we talked about AI. And so let's talk about AI. So I have a lot of friends that are CIOs, CTOs. So whenever it comes to new tech, such as AI, which is relatively new, I talk to them because they give me a reality check. It's one thing what you read in, you read from the investor notes or from Twitter or from the journals, but they're pragmatic. They have to make it work in their firm. So what I've learned, AI boom is not going to stop. They see AI as a threat to their business, and they need to spend to keep up. So that alone, and I looked at the investments, and I could look at the big banks and some of the fintechs as well, and they're increasing their investments in AI by at least 30% year over year. So I look at that boom is not going to stop. The other thing that I looked at was we had election cycle, and we had a problems with regulatory risk in crypto because we had a hostile SEC. I had a lot of friends that had to move to Dubai, Singapore for the businesses. And now a lot of them are thinking of returning back to the US. And and that's amazing because we had a crypto market that still moved, but we had a hostile SEC. Now imagine if we have a proper regulatory framework in place, and we made funding from the U.S. banks a lot easier because there was an operation called Operation Choke Point, which I thought was little overblown. But when I looked at it and I spoke to some of the entrepreneurs in the crypto space, they could not get a line of credit.
Yeah.
I mean, they had to put up other types of capital to get a line of credit. So that really slowed things down. But all that's unwinding right now. It's making me more bullish because the industry is asking for a regulatory framework, saying, "Hey, just tell us what the rules are, and we'll make it work." So having both the AI boom, which is disruption, and everyone sees it as potential disruption for their business, and what crypto with imagine a SEC that's aligned with the industry. So when you look at those two things, uh, I see much more upside. And plus, we're entering a liquidity cycle. What I mean by that is lowering interest rates across the world. It's a coordinated effort by the central banks. So what that means is you can easily borrow at lower rates, both consumers, businesses. So that feeds into these disruptive technologies as well.
So it looks good, from a lot of these angles. One thing we kind of touched base on is like, okay, you say all that, you have these investment themes, things are looking great, regulatorily speaking, price go up, number go up. People are scared of that AI is going to run them out of business, so they're spending on it. You know, looks great. So we talked though about like, either talking to your network or trying to learn about taking the other side of the argument against your own thesis. So when it comes to this crypto and AI kind of push that we're seeing right now, what is the thing that looms in the back of your mind? Is it a lot of that kind of hopium of this stuff actually not getting pushed through? What are the things that haunt you a little bit?
So I look at liquidity risk, inflation.
Mm,
So the first thing I look at is okay. I look at the U.S. Fed and think of what they're going to do because they really control the liquidity valve for the world. And we talked about that liquidity is the most dominant variable here. That's the way I like to think about it. Then you look at inflation, price stability. So I look at it. So what I did was I looked at energy and I said, okay, where's energy going to be in 3 to 6 months? I- and I look at saying, okay, are we going to have higher prices for natural gas or oil, or lower, or they're going to be the same? And the same thing, I look at Fed policy, saying, are they going to continue lowering interest rate? Are they going to stop? And these are all probabilities. Then I look at the overall job market and thinking that okay, it's getting softer. They looks like inflation may have increased, but is it really inflation increase or is it more productivity growth and income expansion? What's really causing that increase? And those are the questions I've asked. So I don't see inflation in 3 to 6 months from now. I see I see the Fed continue to do cuts. I think the scare that happened recently is they cut 50 basis points. So
mhm.
what happens is these algos run wild. They're saying, "Oh, whenever the Fed cuts 50 basis points, that means the economy is in trouble." Historically, that's what they look at. They look at previous cycles and saying, "Oh, there must be something there." There's nothing there, from my point of view. So what happens is people look and saying, "Oh, but long-term rates are increasing. What's going on?"
Yeah.
And short-term rates decrease. Well, the Fed, when they cut, the short-term rates are what they have control over. Long-term has other factors. There's businesses borrowing, mortgage rates, and those are priced by the banks, the private sector. They don't have as much control over them. They have a little bit, but not as much. So I believe there's a lot of repricing going on. Marks were just shocked, saying, "Oh, they did a 50. We thought we were going to do a 25."
Mhm.
And so that's my thinking around this. I hope I answered your question.
Yeah, I think so. I think it's like, you look at kind of the big macro factors, and you probably have an idea in your head of like, okay, if X and X kind of change, I might have to reevaluate
Yeah.
my thoughts. But for all the things that I look at for now, that doesn't really, because we're in this like period, right, where everybody like compares to the fractal of like the 70s, and they think like,
Yeah.
oh, we're starting to see that ramp back up, and look what happened last time. um but in all the things we look at, if we just like kind of keep it simple stupid, like global rate easing cycle, spending is going to keep occurring, job growth will probably be, the unemployment rate will probably be okay. The housing situation seems to be under control and will probably help inflation data moving forward. And like the impact of the efficiency and AI kind of growth will make companies more profitable moving forward.
And energy. I've
And
never seen
energy,
I've
right?
never seen sustained inflation with cheap energy. I
Right.
was going back, I was looking at I've seen spikes, transitory spikes, but if
Yeah.
you have cheap energy, it's very hard to have sustained inflation. And also rental prices as well have been coming down quickly.
Yeah.
So you factor those two in, it's very hard to have sustained inflation.
Right, because even, I mean, energy is showing its cards, right? We have this looming threat again of nuclear war, and we're still sitting at what, mid 60s
Yeah.
in crude and Brent. So you're seeing that the power of that Middle Eastern, uh, World War III thing is dispersing, and because we're available, we have like so much supply available in more places in the world, right? Especially
Yeah,
kind
you
of on
nailed it.
U.S. soil.
And if you look at the U.S., we are producing, I think, twice the amount of oil as Saudi Arabia. Yeah, and in previous when we had previous crises, that wasn't the case. So
Right.
now the markets is showing. The markets is showing it with the price, like you said.
Yeah. So I think that's pretty great. We're pretty aligned there. So this can kind of tie into one of the things we really focused on last time, which is your review process. So, weekly, monthly, quarterly, yearly, you're asking yourself these questions, you're talking to different people, you're reevaluating kind of everything with with this idea of what you have. You're just trying to steer this ship, but trying to keep touch on kind of all the different tabs. So, as we've gone through this past year, a lot of shit has happened. I mean, we've had like take crypto for example. We've had this massive movement out of like alts and technology and into just pure speculation, right? We've had this giant kind of divergence there. So how have you been able to like review? Let's kind of focus on the crypto side of things here, because I think we kind of covered like when you're reviewing your AI stuff, like it's been pretty straightforward. But I've given your Twitter presence and what I see you talking about recently, it seems like you've been kind of thrown into a whole new thing when it comes to like memes and kind of culture movements and stuff. So how have you thought about how you've been reviewing over the past year, especially with all these big kind of changes in your portfolio? And like, have you like changed who you've been talking to, and like how are you approaching these new movements?
Yeah, so I'll start with meme coins because I've been posting a lot of meme coins recently. I think the last 3 weeks I've posted more than the previous year because of
Love to see it. Love to see it.
because of the meme coin movement. So I obviously memes allows us to. When I look at memes, right, it's all about attention, right? And we've always had memes and virality through YouTube, TV commercials. Now we have it through these coins. And in the past, when you had any YouTube, you could have something with 100 million views, and the content creator would make $50 off of it or $100, a very small amount. Now with meme coins, that creator can make millions, and that's what gets everyone's attention.
Mm.
The ability to hit that home run. It's a lottery ticket. And there's a culture. There's cults to meme coins as well, because you have meme coins like Doge. When I look at Doge and I talk to any BTC OG, they love Doge. It brings a smile to their face. It's
Yeah.
culture, history, and they will never sell their Doge. As an example, they will always keep Doge because it puts a smile on their face. Then I look at coins like Bonk that came about 2 years ago in Solana, after we have that brutal bear market with FTX and other collapse. It unified the community. It was a something that brought everyone together. And I look at these meme coins as mini cults, cultures. And yes, there's a gambling side of it where you'll have memes like Peanut, example, Peanut the squirrel.
Great meme.
That all great meme out of 2 weeks, won to multiple billions. I've never seen anything like
The
that.
power of a story there.
Yeah, the power of story and narrative, and to be able to monetize it as well. And one of the things I was focused on crypto, and why I'm spending so much time with memes, is how do we onboard 1 billion users? How do we do it? And I was talking to my friend. He helped set up fantasy football, and the actual product for the NFL. And he said one of the things they were looking at, saying, "Hey, how can we get more women in football? We just couldn't onboard enough women." The last 10 years, because of fantasy football, they've onboarded women at around 100% year over year increase, especially the last 3-4 years, and it's because of fantasy football. He was mentioning that to me. I was surprised and by that. Then I thought about memes. I was connecting the dots, saying, "Wait a minute, how do you onboard people? Because there's prizes, there's things you can earn. There's a reason they like fantasy football, because it's attention. They're into the games. They want to look at the players, their teams, their quarterbacks, because they're tied to it, because there's some sort of reward associated with it. And memes takes it to the next level, saying that, hey, if I'm the right community or the right cult or the right group, then I have the ability to become very wealthy. And it's what people are gambling on. And we've always had gambling, but with memes, there's hardly any friction to it. Because if you look at the other social platforms, YouTube and other platforms you may use, yes, you have viral content, but there's a lot of friction to it.
Yeah. And then we got things like MoonPay or whatever coming out now to make it pretty standard for everybody. So they're like little mini network effects, right? At play
Yeah.
with a story or a picture attached to it. One of my favorite things about the past year has been watching every mid curver fall, right? Like I'm one of them. Like every single person starts out saying, these things are fucking stupid, outside of the randoms that have always believed, right? But like, nah, they're stupid. Like whatever. And then there's a meme that gets to them, right? There's one meme that's like, that's fucking funny. I kind of want to own that. Right. And then they fall. And then once you get one domino to fall, like, and maybe your coin goes up like 200% or something, dude, it's over. It's over. You're in. You know what I mean? That's all it takes. And then all of a sudden, like if you watch a couple podcasts out there like Steady Lads or any of these crypto ones, now all of the clip art is what's the next meme coin, AI coins, this, that, whatever. And you're just seeing them topple all over. So to me, that's just like more conviction. And I put out a post recently that in a weird way, the most successful memes are like the anti um like reflexivity loops. They like keep getting, like if they go up and they die off 70%, 80%, and then they come back to life. It's like that community gets reinforced and reinforced and reinforced, and then they become like these multiple $billion coins, like Bonk. Like Bonk's a great example. How many times has Bonk had like a 60% retrace?
Oh, at least 3 times. At least
Oh,
three
it
times.
has to be even like it has to
Yeah,
be more.
more,
Yeah,
more.
somebody pointed out Popcat had 970% retraces until it got to $1 billion. So like it's just reinforcing the narrative that it won't die over and over and over, and it's creating these. Now look, yes, 99.999% of them will be dead money, gone or whatever, but we're creating these movements, cults, things like that. So it's just really interesting, and trying to wrap your head around how to move money within those ecosystems is pretty wild. So
Yeah.
how have you approached that? I kind of know you kind of have your bigger picks maybe, and then you kind of say, okay, that's kind of it. So how are you approaching all that
So,
sector?
so meme coins I look at as throughout TradFi, throughout all the analysis I do for crypto, meme coins, it's about an intention game. For me, I look at the attention and the community, the type of community. And part of it is I look at the people in that community as well. Some of the key leaders and key community members, and to see if they're the type that's going to stick it through. Because you're like you said, you're going to have 50, 60% pullbacks.
Yeah.
Right? And a community like Bonk, I know many of the members of that community, and I know they're going to continue to grind.
Yeah.
They're not going to stop. They're relentless. And similar with Popcat, I know some of the members of Popcat, and I look at it, and every 70% dip they come back, I see more members added to Popcat. Similar with Bonk. So that reflexivity seems that the community gets stronger
Mm-hmm.
after every retrace, and then it pops back up, retrace. Instead of losing people, they're adding people. And you can see that in the wallet sizes.
Yeah.
Active wallets holding more than 1,000 US dollars. You see it growing um,
Mm.
after all these declines and increases. So it's amazing to watch, because usually when you see a 70% decline in asset, you run the other way. You take your losses, you leave. But here, you're sticking it out because combination of belief. You really believe in the meme, and that you think the meme has legs, and the other people will buy into the meme. It's that belief, right? And that belief, where does it come from? I think a lot of it's human creativity, because these memes are funny.
Yeah.
And if you look at it, they make me laugh out loud, especially some of the images, the videos. And I think that's part of it as well. You can look at all the great videos you see from these memes. It's internet culture. You see with Beeple as well. Every day, Beeple posts an image capturing the culture that day. He had one with Peanut, the squirrel. He's had a couple of Bonk as well. He's had some of Popcat. And you look at it, he's like cataloging the entire culture of the day.
Yeah.
And he does this quite frequently. You can see it.
So same with Bold Leonidas. Shout out to him. I think I think his are hilarious, but they're able to capture the zeitgeist of the 24 hours and then put out a piece of art. That's pretty impressive. Um, so when I hear you say that, it makes me think of Ethereum, right? Ethereum is having its struggle, and you have these decision points where you have to ask yourself, do I dump an investment that's not working out, or do I hold on to it like a meme where you see like maybe the culture prevailing or you believe in it? So like, how are you deciphering between these two? Because it seems like almost two different tracks you have to take in the current ecosystem.
I look at speed of iteration, speed of releases when it comes to the L1s, the layer ones, the base infrastructure is how fast can they evolve? How fast can they make change?
Yeah.
Because this is a game of where you're going to have other chains come out like Sui, you have Monad, a number of other chains coming up. There's a lot of innovation. So how quickly can you adapt and change? And Ethereum change has been rather, I would say, a little bit slower than I thought.
Mm.
And they recently had a discussion about their roadmap. I think they had a DEF CON, and I was talking to some of my friends who went there. They said they hardly spoke about the applications, the dApps.
Mm.
They talked about infrastructure. And if you look at some of the newer chains like Sui or Solana, it's all about the dApps
Yeah.
and what's being built or how it's being used on chain. And Solana we say is cheap and fast, right?
Yeah.
But also it's the culture of creating applications as well. There's an entire culture there of I see teams working together to launch new products. And they launch them rather quickly, and I remember seeing that in the early days of ETH with the smart contracts, where I would see a large number of smart contracts being created, audited very quickly, especially during the early DeFi days. They were moving so fast. Now they have that in place, but but they've really slowed down on the dApps being produced, and that's what concerns me about the Ethereum ecosystem in general.
Yeah, that makes sense. A lot of people have kind of come to that conclusion. You're obviously still going to find some that are different than that, and maybe it'll pay off for them, maybe not. Who knows? We'll move on from Ethereum. We can't, we got to keep speed and latency low here. So one thing we touched based on in the previous interview was like uh, mistakes that were being made by people over uh, euphoric runs, right? So we had this, you mentioned back in the day when I was just a little child, there was this LTCM debacle that a lot of your mentors or friends kind of worked through, and that was why they were able to prosper during the dot-com bubble, because they learned a lot from last time. We touched base a little bit on um, the FTX collapse and similarities, and what mistakes were people making, what did they learn from them, things like that. So let's move forward to our current run. We've been in a bull market for a while here. A lot of people have made some money. What are the mistakes you're starting to see people make already? How are you approaching this? Has your plan for this cycle changed? Is it a stronger thesis? So you've moved targets. Are you sticking with kind of how you approached it? What's your thought here while we're in that moment? We're in that momentum.
So for me, the big thing for this cycle has been the regulatory clarity, or the regulatory clarity that's going to happen. I think that's the most disruptive piece of it, to have a proper legal framework and not have an SEC that is trying to choke crypto in the U.S. So that makes me more bullish. So full disclosure, I've taken my cost basis out with the recent run-ups. So one of the things I've learned early on is protect principle.
Hmm.
So what number, what target is that? And I had it for Solana, saying, hey, as soon as I hit this 8x, I'm going to take out my principal.
Hmm.
Right? BTC, I did the same thing, right? So I have that principal I've taken out. And the main reason why I took it out was this was prior to the elections because I didn't know how the elections were going to turn out. There was a lot of uncertainty.
Yeah.
So I knew crypto was still going to do well, but I thought the returns were going to be capped because when you have an aggressive SEC and you don't have a regulatory framework, I don't see mass institutional adoption. Now I think that's changed, and you can see it right now with the flows. You can see with just the Bitcoin flows itself
Yeah.
and the dominance level and the way it's moving. It's usually when BTC moves like this, Bitcoin in previous cycles, it was retail driven. This is not retail driven. This is almost all institutional flows.
Yeah.
So, and institutions are not going to go and day trade Bitcoin. They're going to hold. They're planning to hold for months or even years. And so that gives me confidence that this cycle is going to be quite explosive, especially for Bitcoin. The other,
Let me ask you real quick
go ahead.
before you go on. Like, so you kind of pre-election, you were like, all right, I'm gonna take my cost basis off
Yeah.
the table. It's been a pretty good run, and then this red wave comes, and there's all this maybe clarity comes out of
Yeah.
that. Is that are you like urged to put that back to work, or do you just kind of say like, no, like I took it out for a reason, and I'm now going to keep that as extra capital to do something else with?
So I'm treating it as an extra capital or something else. With the main reason why is usually in a crypto cycle, you have BTC season where BTC dominance increases tremendously, alts suffer. I'm going to use that capital that I took out to make bets on alts.
Hmm.
I'm waiting if I think BTC dominance go up to 68, perhaps 70%. Then I'm going to look at the alts and see what the markets how they're behaving, which alts are behaving and holding up in strength. Then I'll make some bets there because BTC is a multi-trillion-dollar asset. If it's not going to go 20x or 30x, but you have some alts, 10 billion, 15 billion, 20 billion, smaller assets, some DeFi protocols, um, potentially that you can make those bets with. And that's really tied to some of these legal frameworks that are going to be released. So there's a lot tied to that as well. And based on that, I will go and make different types of bets.
So what type of sector is an example of a regulatory clarity comes about? I mean, DeFi is probably like the obvious one here, but you probably don't want to just see regulatory clarity. You want to also see users, right? Like that's something
Yeah.
you've talked about. So
Yeah.
yeah,
So what I want to see is more users, and hence why we talked about the onboarding of users. Like for instance, in Solana, you have 1 million wallets now of active wallets. And that doesn't translate to 1 million users. We know that. So what I would like to see is the active number of users growing, especially for these various protocols, the onboarding of it, onboarding of users. Like we have Jupiter, the Jupiter ecosystem in Solana. You have Camino. I still remember that DeFi wave we had in Ethereum, the initial adoption. If you remember how Uniswap and the adoption grew that summer, it was just insanity. So I'm looking for that type of move in terms of new users coming on chain, and that will allow me to make those additional bets.
Okay, so we move forward in time a little bit. Bitcoin dominance goes up to 70, 75. Beautiful institutional money continues to flow. Memes are for retail. That's fun and games on the side, and alts continue to kind of fail relatively to BCC. Then you put that to work, all right, and we're moving through time through the summer and maybe into the fall of next year. Things are going as planned. How have you started to think about one, exiting things, two, like, are you convinced crypto is at a different stage now, like where you'd want to hold more Bitcoin through multiple cycles, or would you kind of continue that, exit as much as you can, kind of try to buy in the next cycle, or have we like step function changed to something different? So have you thought through any of that now that we have this kind of different regulatory framework?
Yeah, for Bitcoin, I've been looking at the volatility, and I looked at that 7-month chop that we've had, and I was just shocked with the range. Usually you see a 35, 40% pullbacks, a couple of them during the chop. We saw nothing like that. So the volatility was not there compared to previous cycles. Um, I'm going to keep a close eye on it because if you look at the worldwide markets for bond and equities, let's say that's roughly is 100 trillion in assets. Crypto is about 3 trillion. So one of the things I'm looking at is, okay, is crypto going to, some of them, I think Chris Burnett said 10 trillion. Others say 7 trillion. I want to see where crypto's overall market cap hits in this cycle, because if we go too fast, right? What does too fast mean, right? Maybe Bitcoin hits 500,000. There
Don't
is
tease me, Robbie. Don't tease.
but there is a point where some of the OGs will sell,
Yeah.
right? So you're going to have increased volatility as well, especially if the price goes exponential and quickly. So so I'm going to look at obviously a number of factors from previous cycles to see when we're going to hit these tops. And usually we hit these tops, and you see it, right, where people say 30 million Bitcoin, or it can never it can never go down. And you could look at there's some factors you could look at, especially when you see some of the wallets selling heavily. Usually you see that there's
Yeah.
certain institutions, certain wallets, and that kind of predicts that, wait a minute, we're topping out.
Yeah. If you take you could probably find 8 to 10 factors that if you stockpiled them and they were all, MVRVs high,
Yeah.
fuel multiples high, hash factors or hash rates going down, exchange supplies going up, large wallets are selling.
Yeah.
You start to, we've gone in a parabola and now it's expected that every day we're going up. Well, hey man, like you might miss out on something, but those are the non-price signals that I'm approaching this
Yeah.
run
So
with.
getting back to your point was, am I going to sell some Bitcoin? Of course. I've been selling Bitcoins at every 4-year cycle. I've been taking some out. I never sold at the peak, but I never sold at the lows either, right?
Mhm.
So and but I looked at it at my selling points over the last 10 years, and if I were to hold, I would have had a lot less Bitcoins. So it's good to be able to have a portfolio and look at that.
I think that helps. So that kind of ties into the don't fall in love with an investment, which is kind of next here on the outline. I get these grandiose things. I watch Saylor keynotes, right? I love the idolatry of Saylor. He's just this aspirational character. He gets up there, he says that all of the world's capital is going digital, and I can't help but like it. So there are parts of me that, I start to be like, well, why? Like the whole goal is get more Bitcoin. Why would I ever sell Bitcoin? And I have to put myself in check, because I have to remind myself of year and a half, 2 year ago, James, to where things weren't going as well in the bear market. You'd love to see a run, and you told yourself, this is cyclical. You're going to want to take money off the table, and you can feel yourself changing in a bull market. Like, I could just feel it to where I'm starting to buy into certain narratives and things like that. And I think that was the one thing you touched base on for one of the biggest mistakes is people just not taking profits. And then that will roll into other mistakes as a bear market sets in. So
Yeah.
is that the thing you kind of see ahead of us here?
Oh
Is
yeah.
like the inability to take
There's no
profits?
perfect asset. One of the things that concerns me about MicroStrategy, what Saylor is doing is, and I've been in markets for a while, 30 years. There's no perfect asset. And the game theory is happening. There is someone, some quant, some trader that's looking for a weakness, or looking for that you know, looking for that chink in the armor,
Yeah.
and wants to take advantage of it. And that's what markets are. That's how the markets behave. and I'm kind of concerned about that, especially when you consider when there's a lot of leverage in the system as well, and hence why you want to take profits, because you definitely want to be in, 3 or 4 different asset classes. You don't want to have everything tied to one specific asset class, one coin, one stock. My concern is that some people are doing that again in this cycle. There's no perfect investment, and as the sooner you realize that, the better off you're going to be, because you want to have you want you we talked about this, you want to have different buckets of risk, and if you don't do that, you end up going to be losing it all. You're going to be what we say in this space, you're going to be a bag holder.
Yeah, bag holder, a community member. Yeah, because like one of the things I talk about a decent amount is this idea of like this, you reach this anchor point, right? So I have X amount of Bitcoin, and I've had that for so long that like the idea of me having less than that number now feels like gross, right? So that like makes it harder and harder for me to sell. But that's like an ego thing. That's like a FOMO thing. That's like a comparison thing to other people. But by having that mindset, it can really hurt me if I'm not willing to take profits and sell. Right? Like I still have different assets and I still have my life and all that, and it's not a big deal to just rotate into something else
Yeah.
in a cyclical nature.
Yeah, you nail on the head. I'm constantly rotating between these buckets that I have. And like I said, my rotation for real estate took me about 12 years to do
Yeah.
that rotation, but I did rotate, and I do have a lot of, highest amount I've ever had in stocks. But however, I created a 7-year bond ladder recently to cover all my living expenses for the next 7 years, since rates have been so high. Just because if we have a brutal bear market next 3, 4, 5 years, I don't need to touch anything. I could just take that, live off that ladder, right? And that's one way that I de-risk. I didn't like doing it. I'm like, why am I
Yeah.
was thinking about the other week, was saying, why did I create this 7-year ladder, even though it's less than 2% of my assets? Why did I do that? Why don't I take 1% of that, make it 3 years, instead of seven, and put that in, some more stocks? And it's that greed. And
Hmm.
a good friend of mine, who I spoke to, saying, it's less than 2% of your assets. What are you doing? But you see what I mean, right? It's
Yes.
your mind plays tricks on you because you think you're infallible.
Yeah. It's also like kind of to your point of the sleep at night test that you go through, right? It's going to
Yeah.
maybe just by doing that, it's help you sleep at night and continue to pursue all this stuff because you kind of took care of that future you for a little bit.
Oh yeah, definitely. And that's the most important part of this cycle. Um, I could even see people, leaving generation wealth on the table. So
Mm.
if you can go and take care of 10 years of living expenses, pay off your mortgage, send your kids to college or help them through college, perhaps retire 10 years earlier, and that option's on the table, I take it. You can always make more money.
Yeah. Yeah. So you say you rotate and things like that, but
Yeah.
people might think, oh, that he's flying money all over. Well, your time horizon, like we discussed
Yeah.
in the last episode, is actually like a minimum of like a year to
Yeah.
maybe 3, 4 years.
Yeah.
So when you say rotate, it's over a long period of time with a lot of due diligence and thought.
Yes, exactly. So, we talked about the themes, and when I do a rotation, and when I do that, I have conversations with with 2 or 3 individuals that I consider experts in that area. I have a couple of friends that are experts in real estate, some that are in particular stocks that I'm in, and some are in, the VC investments I've made. So if I'm going to go rotate out of a particular bucket, I write down my plan, what I'm thinking, and I ask them to punch holes through it. And they've saved me a lot of money throughout the years. I try to do some really dumb things
Yeah.
over the past, couple of decades, and they've saved me. So, I'm grateful to them.
Real quick side question, and then we'll get to this next part. But what if something like, let's say you were in MSTR and it ran up, and you're just like, all right, dude, like this is like, I know markets, I've done this a long time, I need to capture this, but it's like less than a year. Like, how do you view like taking a short-term capital gain and rotating and stuff like that when it has tax implications?
Yeah, so it's gone up 8x. I set stops. I just say, you know what? I'm not going to give back all those returns. Yeah, paying taxes, I don't like it, especially for short term. But if I'm up 8x,
Yeah.
it's kind of silly
Right.
to wait out for long term. I've done that in the year 2000 cycle. It was the dumbest move I made because within 3 weeks, I saw a stock go down 90% that had about $500,000. And
Good times.
yeah, good times. So
Young
yeah,
young Ravi.
no,
Slinging
take profits, especially if it's going to change your lifestyle or the direction or what type of life you can lead. Pay yourself first,
it. Mm.
and that's the most important thing, I would say.
And that's crazy because during the 2000 bubble, you were already like, what, 55 years old or so? I mean, I would have thought by then you would have already kind of known and learned, but who knew?
No, I did not learn. I was a slow learner.
All right. So, let's just say crypto's crushing, AI is crushing, life's good, people are dug in, right? And we talked about last time how we had the blinders on often and everybody just missed Nvidia and AI and the kind of picks and shovels there, including myself. um, and now we're focused on that, right? The funny meme from Kalinakis of like, if you're in crypto, pivot to AI, and it was like the perfect like
Yeah.
Kramer moment to not do that. But what are we missing now? Like what, yes, I think we're all in this echo chamber kind of bought into like AI and crypto is the future, blah, blah, blah. What are some of the things we should at least have some peripheral vision for?
So I've looked at longevity, nutrition, obesity in the U.S. health, and I looked at Ozempic. It's that drug that
Yeah.
you take for weight loss. And I realized people are having it on a subscription now.
Yeah.
So I was thinking about it, saying, wait a minute, you have the wealthiest population the world has ever seen retiring actively. They're going to pursue things such as longevity, nutrition, and health. And I don't have much allocation to that sector. And I've also seen a lot of AI models working on the longevity problem itself. And that's an area where I could see capital allocated to a large percentage of capital allocated to. So that's a hole that I have that I recently started looking at more closely because I was really surprised with how quickly Ozempic took off.
Yeah.
That weight loss drug. I also continue to look at companies with pricing power. Which companies will continue to have pricing power in this AI cycle that we have? Amazon is at the top of my list.
So
They're
like
gonna
things that won't be like commoditized down to zero.
Yeah, things are the company that I'm concerned about is Google. I never thought search would be disrupted, but once I started using a tool like Perplexity AI and some of these other AI tools, it's making me wonder. Say, wait a minute, Google search may be disrupted, and I never thought that would happen. And
Yeah,
so
because
it's like
they can't even like buy some giant, like they own Chat GPT, right? Or like or no? Is that
um,
something separate?
that's Microsoft. Microsoft is
Okay.
partnered with OpenAI.
Well, I
They
was
have a
gonna say
partnership.
either way, it's hard to even like charge for that now, right? Because everything is just it's basic, like LLMs and things like that are being commoditized to no cost, pretty much, right?
Yeah, yeah. It's all
Yeah.
it's all being commoditized.
So like
So that's
Google can't buy their way out of that problem, is your point, right?
yeah. No, they can't. They can go and hire more engineers. They can throw more compute at it.
Yeah.
It's a step point breakthrough where search is being disrupted. And we all know how much revenue. I think it was 70% of Google's revenues off search, but I think something like that.
Mm.
So that's massive. So those are the things I'm looking at, seeing which of these areas are going to be disrupted as well. So we talked about Google search, then we talked about the whole longevity area. I don't have much expertise there, but I know some people that do, and I'm going to be speaking to them as well.
Okay. Yeah. We tapped a little bit onto robotics last time as well. Where do you think we're at in that area? Tesla
Um,
robots are serving drinks at parties now. So were we
so
there?
so it comes down to the legal frameworks in place. So are we going to modify the regulations that allow robots and automation? Because right now, I'll give you an example. In the US, our ports have so much regulations that's impossible to do full automation
Hmm.
in place right now. And if you look at parts of our supply chain, now if that gets rolled back and they they provide the right regulations for automation, um, I could see fully automated ports as an example, and that's massive in terms of the logistics supply chain, and price decreases that will happen. So I think a lot of this is with the regulatory frameworks that need to be put in place. Now we've seen some recently, uh, you know, some some recent things published saying that, hey, we're looking at autonomous vehicles, self-driving cars, and seeing that, hey, we're going to help expedite them and the experiments that are being done. But we have to see if they really do it. But if they do those things, then the technology is just going to move faster.
Yeah, the robotaxi with Tesla and stuff seems actually feasible. It doesn't seem like that crazy now after if you've ever been to like Scottsdale or something, they have Waymo cars all around, and it just doesn't seem that far off anymore, these types of things.
Yeah, but I think what they're going to find out with this automation and robotics, people are going to be your biggest issues, because I could
Mhm.
see people in some neighborhoods taking apart your robotaxi, or removing pieces of it, or being very difficult with the robotaxis on the highway. So there's a lot of factors when you throw in the human element on it as well, that we're gonna have to look at.
Yeah, because you got lots of people that work at those ports that are like, uh, 40, 50, 60-year-old people where robots are like kind of stealing their family name in a way. And I could see it, it's going to be weird. What do you think if over time the unemployment rate were to, let's just say the population stayed kind of stagnant, which I'm sure it'll fluctuate or whatever, but that's a whole nother topic, but let's just say it did. And, automation started to pick apart uh, things like this. And then the unemployment rate went up. But in theory, it's basically a more productive, maybe stimulus check based society where inflation's still not an issue and people are living better lives. Do you think that would change how we look in markets at like the unemployment rate, things like that?
Yeah, I think what we're going to do is we're going to factor in AI agents in the employment indices at some point, because they'll have to change, because let's say you employ 50 million more robots.
Yeah.
Let's say you have robots that are actually filling potholes, uh, or are helping with building skyscrapers. So if you think about it, that should dramatically help with productivity growth, because these robots can work potentially 24 by 7, and we would have to we have to change the way we calculate GDP. It's going to change a lot of the way we do things, and I think we're not ready for that. If we go to that, because we've always had some sort of automation, but we never had it at really large scale, like
Yeah.
what the potential is. We've done a lot of things with software, like software eating the world, what Andreessen said, but now you can have robots eating the employed, if you think about it,
Yeah.
in the real world.
Yeah, It's unreal, but I think at this point I've processed that actually happening. I just don't, like you said, I don't think a lot of people have. We're in this techno future group of people that talk about this all the time, but my mom is not thinking about robots coming to take chip manufacturing jobs in Arizona or whatever. It's pretty crazy, the future here. It's coming fast. So it's been an hour. We'll finish off with a couple short things here. One, we touched base on regulation and the red wave and stuff like that a little bit, but get me bulled up on that situation. How good does this look for crypto now, and especially in America? And if you had to kind of guess, like, how long are these like institutional flows going to kind of buoy the system and keep us moving forward?
So I think it's just a start because these RIAs, we just registered investment advisors, I just started promoting Bitcoin ETFs within the last quarter. So people are just starting to allocate. Just talk about 401ks.
Yeah.
Now you have your sovereign wealth funds. They're buying them as soon as more of them publish that they're buying them. Then it's going to you create a domino effect. And what happens if one of the Magnificent Seven stocks puts Bitcoin on the balance sheet?
You think Microsoft's going to do it? I think they'll do a little bit. Might
I
as
think they'll
well.
do it. I think they'll do a
Yeah,
nominal amount, but
right.
that's gonna pave the way for others saying, "Hey, if
Mhm.
Microsoft is putting on their balance sheet,
Yeah.
then what we're then
All
what are
they
we
have to do
doing
is
here?"
they only have to put like they could put like $100 on it, and their stock
Exactly.
price will go up. Nuts.
Exactly. So that's my bull case. You have your sovereign wealth funds. You have your Magnificent Seven companies like Microsoft. Then you have your 401k holders, your pension holders, and Bitcoin is deflationary, right? If you look at it, you have a finite supply. So if you're going to have that continuous bid.
Yeah, this is where I get into the thing about Saylor's hopium, because he's basically saying that 475 of the S&P 500 companies are just, their capital is hurting them. Their cash flow is hurting them because it's burning at such a high rate. And if you get this narrative to really solidify that Bitcoin is a protective store of value for institutions to avoid like this brutal debasement of currency, then like you could get all of the companies to feel like this is an absolute necessity for our stockholders, right?
Yeah, absolutely. And the thinking here is, okay, if you put 1%, no, I'm not going to get fired over this.
Right.
That's the other thing, right? Because they're all afraid of being fired or shot by using an asset like Bitcoin. It didn't help, like someone like Buffett call it rat poison, right? That didn't help either, right? However, I do see with Larry Fink and Fidelity and some of the others saying it's okay. Hopefully Vanguard comes around. I think that's one
Yeah.
large it's amazing. They're a $7-8 trillion asset manager, and they don't allow. I don't think they allow these ETFs, Bitcoin ETFs. I'm not sure, but last time I checked, they did not.
They've avoided allowing people to purchase an asset that is now up like 50% since they said no, you know?
Yes, I keep an eye on them and see
Mhm.
how they hold up, especially with
Yeah.
their assets under management.
Yeah, really, really interesting next 12 months. And I think, we've been working at this as a group in MBB for a long time, individually. And it's nice to just be here in the moment and take a step back and really see how far we've come. I think
That's been
it's been a cool
fantastic.
ride.
And
Mm,
before we go, I forgot to mention. I think stablecoins are the most dominant product in crypto.
mm.
If you think about payments and how that's being done for everything we do in society, I see stablecoins replacing the majority of that legacy Web2 infrastructure.
So with stablecoins, it's not like something we can really get exposure to, but what it does is gains it produces more rails to move money on this system and will be accretive to the Bitcoins, the Ethereums, the Solanas of the world.
I think it makes the US dollar more dominant because stable coins, most of them are pegged to the US dollar.
Yeah.
So imagine you increase the velocity of dollars around the world.
Yeah.
And there's no reason why you can't be paid per minute of work. The reason why we can't do that right now is the current legacy bank system doesn't support that. So you can imagine you could look at your phone and seeing that I'm being paid, $20 a minute or whatever that is, and it goes to your account, ready for you to use. Or I can go and do a lot of pay $2 or $3 for micro tasks or other things. Those things are not possible. So there's a lot of things we can do with stable coins that that we that we can't do in the current banking system. It's a lot of potential there.
And as all of the world's currencies continue to debase, it's going to be more incentive for somebody who earns money in Argentina or wherever, insert X country, to put their money instantly into a stable coin and move it around that way.
Yeah, and if you look at the large investors around the world, they're constantly hedging currency risk. If you look at it, they're constantly doing it, and that's a multi-trillion-dollar market.
Great stuff. One last thing. Over this last year, is there anything that stood out to you as a lesson, a revelation, something new and exciting? Just anything, I guess, to finish off our combo here.
I would say memes and culture.
Hmm.
And looking at culture and owning a piece of it. That's what memes allow you to do, if you think about it. And that surprised me of how fast the move is. And I thought our adoption rate was going to take a couple more cycles, but with memes and the TikTok followers and the other social platforms, I could see us the next 2-3 years probably hit that billion user.
All right. Before we end, give us your 3 memes that are going to make it to the end of the cycle and be relevant. 3 of them. Don't use Doge. That's cheating. No Doge.
All right. Bonk. Bonk is my number one pick. I look at Popcat. Can't bet against a coin that moves. A coin that moves like that. And I have to go with Pepe.
Wow. All right. Classics. Classic picks, Classic boomer.
What are your picks?
Oh, I hadn't thought about that. Let me look. All right, I go with Bonk too, because I think we're all that. I'm gonna go with my sleeper is $1 Billion Cat. I think it'll be one of the few runes. Or actually, I should stop saying that. We're doing a movement now to start saying Bitcoin meme coins. No more. We're not using runes as the title anymore. So $1 Billion Cat, I think, will thrive, and you'll be surprised. I think it will be the face of Bitcoin in a weird way. And then one last one. I'll go with, I don't even own it, but I'll go with Whiff. I just think it's just too easy. It's just too simple. It's not going anywhere. It's got main characters. I think every time it dies and is irrelevant, it's one of those ones that comes back and shows you something crazy. It just went crazy a couple days ago and then died off 60% again or whatever. So I'll go with those 3. I should have come prepared for a better answer for that one. But yeah. This isn't about me, man. Okay, this isn't about me.
Hey, thanks for having me.
All right, so guys, go follow Ravi, and if you want to talk more to him, we're gonna sell it again. It's been a year of people doing great things, making lots of money. We sit there and we chat in monkey baby business on Solana. You can see his PFP is one of them. One of the rare soul skins, unfortunately, has a mushy trait. But that's neither here nor there. And they are free. They are essentially free, and you get so much value. So that's where you can find Ravi outside of X. So Anyways, any last words, or do you want to get out of here and go wind down for the evening?
I'm just gonna go and take a nice long walk, wind down, hit the sauna, and
Yeah,
just not look at the charts.
get that longevity going.
All right, take
All
care.
right, Robbie. See you later.